Indian IT stocks trade lower after global software giant Accenture reports flat revenue growth and cuts its fiscal 2024 growth guidance to 1 to 3% from 2 to 5% earlier. The sector is the sole sectoral loser, with the Nifty IT down over 2%.
Oil marketing companies HPCL, BPCL and IOC surged close to 2% after brokerage firm Nomura reiterates its bullish call on the stocks and raises its target price across the sector.
Sarda Energy and Minerals jumps over 12% after its joint venture subsidiary Natural Resources Energy gets awarded a letter of intent for composite license for iron ore mine block in Maharashtra.
Brokerage Goldman Sachs notes the rising penetration of branded footwear in India initiates coverage on metro brands with a target price of 1,450 rupees a share. The stock is up with a gain of around 2% coming off from the highs of the day.
Hello and welcome. You're watching us here on Chartbusters. The charts are busting for the frontline indices at least. The Nifty opened lower, but thereafter there was a strong recovery led by the Nifty Bank and a couple of other heavyweights as well. Metals are not doing too badly either. I'm Manglam Malu. With me as always, Nigel D'Souza. Nigel, ahead of a 3-day long weekend, looks like the markets are at least rejoicing, bar IT.
Well, that's right, Manglam. Just take a look at it. The top of our screens, all those indices, they are, glaring green as we speak. But Manglam, you mentioned metals. So let's talk about that. The metal space is in focus of late, especially after NMDC, they cut prices. And there are signs that maybe, in fact, there is some kind of a recovery in China. To understand how are things on ground, on pricing, on demand, as well as what kind of a role does NMDC's price cuts play on the industry, we're joined by Mr. Dilip Oman, who is the CEO of ArcelorMittal Nippon Steel India. Hi, Mr. Oman. Good to have you on the show after a while and hope you're doing well. Well, let's get straight to the basics then with regard to the industry. How are demand trends as of now? Could you tell us what are your capacity utilization levels?
Thank you very much and good morning to all. Thank you for having me on the channel. As far as our utilization is concerned, it's about 90%. And it's a similar figure for the rest of the industry in India as well.
Got it. All right. And so demand, if you're functioning at 90%, it would mean that demand is fairly strong, right? No slowdown.
The demand is strong. It's led by the infrastructure push. But unfortunately, the only hiccup is that there are a lot of imports coming in. If you look at the data over the last 5 months, we have turned to be a net importer from being a net exporter. This is the average of the last 5 months. And, the problem is that there is a serious excess production in China, and China produces half the steel in the world. So it is said that if China coughs, if China sneezes, the rest of the steel industry will catch a cough. For that, we have to keep our immunity level high, and therefore we have to keep ourselves safe, and therefore we must make sure that we are not flooded with steel imports coming in way above what is required in the country.
Well, Mr. Oman, let's take your, China sneezing and the world catching a cold parable a little forward. If you could define the extent to which the world would have caught the cold. I mean, basically what I want to know is how steel prices have moved over the last 3 months. How do they compare to the previous quarter?
See, if we compare ourselves with, let's say, beginning of October, the steel prices have come down by about 8%. And what had happened is that the coking coal price and iron ore prices had not come down in accordance with the steel prices. But of late, yes, the coking coal prices have come down. Iron ore prices in some regions had come down in India, NMDC has announced a small reduction of price over the last 2 days. More is, it's not enough. If we look at the comparison with global iron ore prices, the global iron ore prices have come down substantially. If my memory serves me right, it was about $130 for 62% FeCFR China. It's about 102 right now. So prices have come down globally. This same effect has to be seen in India as well.
Okay, all right. So you expect iron ore prices to come down further. And in fact, you're one of the big buyers from NMDC in terms of iron ore as well. Mr. Oman, could you help us out with your current capacity? You're around 9 to 10 million tons and you had a plan to go to around 15 million tons, right?
If we are talking about HRC,
yes,
we have a capacity of about 8.3 million tons. Now that is being doubled to 15 million tons as we speak. The work is on, and we should see it coming on stream by the last quarter latest of 2025, CY 2025.
Oh, by 2025, that's, just so it'll be less than 2 years away from that capacity coming on stream. Got that. That's about your organic plans. What about inorganic plans? There were various articles that suggested that you're looking at inorganic growth as well. And there are two big assets that we've been talking about. One is NMDC Steel, which strategically could make sense for you to go ahead and buy that asset. So could you clarify on NMDC Steel, point number one? And the second one is, I have been speaking to Mr. Anil Agarwal for numerous times on the channel itself, and he's been indicating he's a seller of his steel plant. Are you interested in that?
Nigel, we are interested in any opportunity that comes up in the way of acquisition. We will examine each case carefully and then take a decision.
That includes the plants from Vedanta?
Yes.
Okay, all right. So let's. So have you all had any kind of discussion with regard to Vedanta steel plant as of now? And also, I want to know about NMDC Steel. Is it still on the block? There was a little bit of to and fro out there. Then there was elections that took place. So there's no much clarity whether or not it's being sold or not.
I also do not have the clarity, but personally, I believe that after the elections, we can see much more of bold, progressive decisions being taken by the government. So I'm sure at some point of time it'll be put on the block.
So you're interested in both Vedanta Steel asset as well as NMDC Steel, provided it's on the block, right?
Provided it's on the block and commercially it makes sense.
How much are you willing to pay though for any inorganic growth? It's normally the normal ratio, Mr. Oman, the normal ratio that we go by, I've been speaking to you for close to around the last 10 years or so. The normal ratio is, maybe in fact $1 million, you spend $1 billion. And that number has been fluctuating. But what is it right now? On inorganic growth, how much for every million ton of steel, how much will you be willing to pay?
See, it entirely depends on the facility and location, the condition, the logistics, infrastructure involved. It's a complex decision that's made, but we are interested at acquisitions, provided it makes commercial sense.
Okay, all right, Mr. Oman, we appreciate you joining in. You're saying that demand is fairly good. The Chinese imports that are coming in there, that's a bit of a worry. Steel prices have corrected, but raw material costs haven't corrected as much. And you and your team are looking at nearly doubling your capacity to around 15 million tons. In inorganic growth, you'll have to look at it. But for the time being, you'll be interested in Vedanta's asset as well as in NMDC Steel, provided it's on the block. Always a pleasure talking to you, sir. Thanks so much for joining in and filling us in with all of those details. Well, for the time being, let's shift focus to our special segment where we get you a few ideas for profit from Money Control Pro. Bharat joins us to fill us in with a stock that he's tracking closely. Bharat?
Today's ideas would be APJ Surendra Park Hotels Limited. The company specializes in luxury boutique properties with an industry-leading occupancy of more than 90% on a consistent basis. The higher occupancy is on account of great property locations, focus on the entertainment factor, as well as efficient revenue management system. The company is on an aggressive growth path and aims to double its room inventory over the next 4 to 5 years. About 60% of the room inventory addition is planned via the asset-light management contract route, whereas 40% of the room addition is via the owned lease property format. Apart from the inventory addition, the company aims to renovate about 10% of its existing inventory, which would lead to significantly higher pricing going ahead. The industry upcycle being witnessed over the past 2 years is expected to sustain. As per the industry experts, the demand is expected to grow at 11% CAGR over the next 3 years, whereas the supply is expected to trail, growing by 8% over the next 3 years. Favorable demand-supply dynamics in the industry is expected to lead to sustained higher pricing, which will not only increase the realization, but also improve the profitability for the hotel companies. The company is also expanding its confectionery business under the Fleuris bar. At the current market price, the stock is trading at an EV by EBITDA of 16.7 times FY25 projections, which is attractive. Investors can add the stock in the portfolio.
All right, brother, thank you so much for that. With that, we'll step into a short break. On the other side, we will be joined by Prabhakar Tiwari, who's the Chief Growth Officer at Angel One, to discuss the company's recent sponsorship deal with the IPL and their business outlook at large. Stay tuned. Welcome back. You're watching us here on Chartbusters. It is IPL season, starts today, but let's talk about Angel One. The company has actually signed a 5-year sponsorship deal with the IPL and will also serve as an associate partner of the league in the financial services category. They also forayed into wealth management business as well. Prabhakar Tiwari, who is the Chief Growth Officer of the company, joins in to discuss this and more further. Thanks a lot, Mr. Tiwari, for joining in. You know, we will talk about the IPL, we will talk about the games, your deal with them, etc. as well. But I just wanted to understand that recently shareholders gave you all the nod to go ahead and raise 2,000 crores. This was largely because of some acquisitions that you had to make. But you already have 9,000 crores on the books. So just wanted to understand the rationale for raising additional 2,000 crores when you already have 9,000 crore cash on your books.
We have had a meeting and, we have got a shareholders nod. And, the process is on right now. And as and when more information is available, we'll make it available.
No, I mean, I understand the process, but I just wanted to know the rationale behind it.
I think this is more of a growth capital. That's what we, kind of addressed our shareholders. And, they have given a nod for us to go ahead.
Okay, we'll wait by for further details then, Mrs. Tiwari, on that front. But we are excited. Every evening there's going to be a lot of entertainment now, and you're the key reason, so to call it. You're one of the sponsors. So tell us, what is the total amount you've paid for this IPL sponsorship, and what kind of impact can it have? In terms of visibility, in terms of client addition. You're putting in big money, but obviously you'll be looking at some returns as well. So go ahead.
I think looking at the kind of business plans we have, I think this amount looks minuscule, and this is what we have blocked for next 5 years. And so you can understand that for businesses like ours, which have almost 3 decades of history behind them of sustainable, profitable growth, any new opportunity we will only look at, from metrics which matter to us, and not go for the hype, which others might look at. So if you look at IPL, combined TV and digital reach would be around 800 million. That's what they're saying. And at least with our spends, not just on ground, but with digital and FCT, we expect to reach out to 500 million, 50 crore people. And if you look at our North Star of reaching and serving 1 billion customers, I think half of them will be able to reach in the first year itself. And now that we just don't have the core broking business, but other businesses which are in different stages of development, I believe this is a good platform for us to, take our business to the next level.
Well, no question about, the platform and its reach and the kind of foray that brands do when they get into the IPL sponsorship itself. But just to get some numbers out of the way, Prabhakar, you've paid about 400 crores for 5 years, right? 410 crores, if I'm not mistaken. Mr. Tiwari?
I think tech came to his rescue.
I think we should do a DRS on this one.
No, that's not.
Yeah, sorry, go ahead.
Yeah, Mr. Tiwari. We were thinking of calling in the third umpire there, but please go ahead.
No, not required. Between three of us, we can settle the matter. So, of course, this is for 5 years, This is for 5 years, right?
So, what's the amount you said?
This is for 5 years, the amount you just said, and each year is payable separately.
So, roughly it's 80 crores per year. How much do you typically spend on advertisements per year? And how much does this add to? I mean, could there be any operating margin hit because of this?
See, our marketing spends and our sales spends are well accounted for. I mean, we look at cost to revenue ratio as one of our growth metrics. And also we kind of look at KYC cost where we combine both sales and branding cost. Let me reassure you that numbers are looking very bright for us and they are within the range in which we want to operate.
Typically on this advertising, how much do you spend as a percentage of your sales?
See, we don't look at advertising and sales costs separately. Like for example, when we started in discount broking model and we were focused on unit economics, at that point of time, we did a lot of performance marketing, and after that, as we rebranded and as we started scaling, so we look at it in combination. We'll ensure that our advertising and sales cost, which
Right, I think it's a, what do you call it? It's a difficult pitch, Nigel, to bat on. The batters have to keep...
In which we have been
please go ahead.
Yeah, I think it's...
Well, the short point is basically that there won't be much in terms of an increase when they're doing their ad spends. 410 crores over the next 5 years would amount to about 80 crores per year. He's back with us. Okay, so we understand that there won't be a much hit on your cost to revenue sort of metrics going forward. Just two numbers before we let you go. One is the kind of market share that you expect by the end of this quarter. By February, you had 60.4% in the commodity market, 20.2% in the equity market. And the second number is the client ads that you expect over the next 12 to 18 months.
See, if I look at, am I audible? Yeah.
Yeah, please go ahead.
Hello. Yeah, so if you look at quarter 2, quarter 3, I mean, we have kept 2 million plus client addition in each quarter and 1 million plus kind of number in last 3 months. We expect that to see a jump, but at this juncture, I'm not able to hazard a number. But in FY25, we are planning good growth, and we believe we will be able to achieve those numbers.
All right, you have a lot of money in your books, and as you said, you've got the nod to raise more money. Inorganic growth is something that you look at, particularly in the fintech space. Is that a possibility?
In past, our management has commented on this. We are not ruling out any possibility at this juncture, but whatever decisions we will take will be in the interest of a long-term sustainable, profitable growth of our business.
All right. Got it. Mr. Tiwari, for the time being, we appreciate you joining in. You seem to be in fine form this morning, and hopefully, in fact, the team that you're cheering for and we are cheering for as well.
Which is the team that you're cheering for?
Thank you. Let the best team win. The way we are putting efforts with our business, I'm sure every team deserves to win if they put the hard work and the positive spirit.
I think we'll have to call.
For this one, we'll have to do a DRS, I think. We kept bowling outside the off stump and he did a well left on that one. Thanks a lot, Mr. Tiwari, for joining in, and wish you good luck with this partnership with the IPL itself. Take a short break, come back, focus on the markets and individual stocks.
Welcome back. The markets are virtually at the high point of the day. The Nifty has hit a 50. That's half a century. The Nifty Bank is raising its bat because it's up closer on 200 points odd. But what's making its way back is the Nifty IT index. That was down considerably at the start of trade. As we speak, it's virtually at the high point of the day. So it's cut its losses. It's up close to around 1.5% from the low point of the day. And you pull up a whole host of stocks. TCS is now down only 1%. Wipro as well has cut its losses. Infosys as well. So most of those names. In fact, HCL Tech was down 5% earlier today. That's down only around 2.8% odd. So the markets are doing well. The mid-cap index is underperforming, but the breadth of the market is helping your portfolio because you have way more number of stocks that are advancing in comparison to the number of stocks that are declining. Hope you enjoyed the show. That's a wrap on this edition of Chartbusters. Stay with us. Trading Hour comes up next.